please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Alright, while the e-way bill rollout was smooth and successful as per the government, it is not smooth and successful at the Asian markets, and that's because it wasn't smooth and successful on Wall Street yesterday as well. A sharp sell-off coming by on the Wall Street, the Dow plunging around 450 points, the S&P closing below the 200-day moving average. And if we take a look at the Japanese markets, they are leading the losses in the region, down over 1% as we speak, though a little off the low point of the day, still sitting with cuts of around 220 points. We're seeing a mild bit of strengthening on the dollar yen as well, moving lower or stronger from levels of 106 seen yesterday. The Korean markets lower, that too aided by or affected by a bit of strength in the currency. The Korean won at the highest levels in the last 1.5 years. Let's take a look at the Straits as well as the Taiwanese indices, both of them sitting lower with a cut of 0.75 to 0.8%. What does this all mean for SGX Nifty? Well, for starters, looks like we could see a bit of a cut. In fact, 60 points on the lower end is what the SGX Nifty is indicating. Will be interesting to see what happens through the course of the day.
Okay, and that is stemming because Wall Street was weak yesterday. The US stock indices moved into the correction territory in the overnight session. The Dow plunged over 450 points to hit a new low for the year. The S&P 500 dropped over 2%, while the Nasdaq dropped 2.7%, led by Amazon, which declined over 5% in trade. CNBC's Aditi Roy gets us a wrap of all the action on Wall Street.
And that sell-off was big and wide on this first trading day of the second quarter. This as stocks tanked amid anxiety over a trade war and fears about the tech industry getting hit with regulation. All three indexes were in correction territory. As you mentioned, the Dow plunging 458 points. Intel was the worst performer in the index, also hitting a new low for the year. The Dow, the S&P 500 dropped 58 points or 2.2%. The index also closed below its 200-day moving average for the first time since June of 2016. The Nasdaq dropped 193 points or 2.7%. This as Amazon declined 5.2%. Facebook ended the regular session down 3.75%, extending its losses over the data scandal. And Tesla fell more than 5% in the regular session, this upon worries about the Model 3 production rate. And on that topic, Elon Musk has taken direct charge of Tesla Model 3 production. This after Tesla missed production targets for the Model 3 in Q1. And finally, U.S. factories reported robust demand for their products in March, but say rising prices for materials associated with the new tariffs threaten to slow down the industry's expansion. The ISM said its index of factory activity for March was 59.3. That's down slightly from analyst expectations of 59.8, but it did remain near its highest levels of the past decade. Even though the survey took place before the tariffs went into effect, the head of the ISM survey says distributors raised prices on materials almost immediately after the president's announcement.
Okay, on that note, here is some important market opinion. Brian Jacobson of Wells Fargo Asset Management believes that 2018 could be a year of contradictions, while HSBC's Ben Leidler is unclear on earnings visibility for the U.S. market. Hear them out.
One of my big concerns, though, especially early in this year, is that a lot of analysts have already ratcheted up their earnings expectations for 2018. And that's one of the reasons why we thought that 2018 could be a year of contradictions, where you had fiscal tightening, now you have fiscal stimulus, you had monetary stimulus, and now monetary tightening. That can induce a lot of volatility here, and we're probably going to see quite a bit of that in the first part of this year. So let's kind of wait and see what earnings season looks like, but I'm a little skittish as we enter into second quarter here as to what the outlook actually is in the near term.
I think you've seen the move. I do think you have great visibility on those earnings, though, and I do agree that people are maybe a little bit too pro-cyclical right now. I think you need to be running a bit of a balanced portfolio. I think the real opportunities right now are not in these cyclical sectors. It's not in the financials. It's in these unloved sort of telcos, utilities, consumer staples, the things that have derated, the things that are sensitive to this bond yield, which we think has peaked and is stabilizing or coming down. I think that's your sort of opportunity. And I think, if anything, people are a bit pro-cyclical.
The one thing that markets are excited about right now is the trade war issue between the US and China potentially. And I think none of us have got a crystal ball, otherwise we wouldn't be here, I guess. So let's look at precedent. And if you go back to 1985, we had the Plaza Accord, which topped down the value of the US dollar, specifically with Japan. And at that point in time, the US was petrified that Japan as the economy was going to overtake the US at some point. And of course, that didn't happen. But now, of course, from Trump's point of view, the domestic political agenda is really paramount. And for him, having this visible trade war with China, it is a good way of putting more attention on the domestic voter, which, sitting in the US Rust Belt, is going to like the fact that Trump's doing this.
All right, and while Wall Street was in the red and Asian markets are in the red, the European markets, they were saved the blushes because they were shut yesterday for an extended weekend, the Easter weekend. So it'll be interesting to see how they open up in today's trading session. The afternoon session will be important for our markets on account of that. But what was in the red was the emerging markets pack. So both the Russian as well as the Brazilian indices should come up for you, seeing cuts of almost 0.8% for the Bovespa, while the Russian index saw a cut of over 1%. Crude oil prices were lower. But talking about crude and currency, let's take it straight to the currency space. Then the dollar, that was under pressure as the trade dispute between China and the US escalated against the yen. The dollar extended losses, making it the third consecutive session in which the greenback slid against the Japanese currency. Now, yesterday, back home on the last trade, the first day of the new financial year, saw markets surging more than 1%. The Nifty extended its opening gains in the last hour, ended above the 200-day moving average. The Sensex rallied almost 300 points. In the mid-caps, they outperformed the benchmark indices. Gains of close to 300 points there as well. The banks, they were underperforming, losses led by Axis and ICICI Bank, which was down about 6%. But the market breadth was strong. Anisha, that was yesterday. Today we're looking with weak global cues. What's the setup?
Well, yes, as you mentioned, the most important cue for the opening would be the global cues, which are weak. The US markets ended in the red, but all the three indices actually closing in the correction territory. The Dow fell 758 points at one point of time, recovered around 300 points, but still closed 2% lower. It reported a new low for 2018, so that's an important point to watch out for. The S&P 500 as well closed below the 200-day moving average. Now, this is the first time since June 2016 that it has done that. The Nasdaq also went negative for the year yesterday and entered the correction territory for the first time yesterday. The broad markets also did not do well, and as per experts, the broad market index clinched its worst start since April 1929. Okay. So it's the worst start since the Great Depression as per some of the experts, and that is also actually shown in the CBOE volatility index because that jumped around 18% in trade yesterday. Now, the reasons for this sell-off are many. Now, of course, there is China implementing these tariffs, and that's the reason that it is spurring some fears regarding the trade wars being increasing and aggravating. But other than that, President Donald Trump also said that he's linking the proposal to build a wall with Mexico in the NAFTA negotiations, so that's also a bit of dampener. And there were a lot of stock-specific news that actually dragged the key market leaders lower. There was news that Apple is going ahead to use its own chip when it comes to the MacBook. That's the reason Intel was down. There were some negative tweets by the President and Amazon as well, and that's the reason that stock was down around 5%. The domestic factors as well to start with are not that exciting because the core sector data came in at 5.3% for the month of March as well. Even the earlier data for the month of January was revised lower. In terms of the fund flows, the FI net sell figure came in at 690 crores, so they continue to sell. The DIS did try to pump in around 400 odd crore rupees, but it remains a net institutional sell in the cash market. Now, the key level to watch out for today, of course, the 200-day moving average on the Nifty of 10,182 really remains important. On the upside, of course, the resistance is around 10,250 to 10,280. Let's see if later in the day we even try going closer to that level, because there are a few positive news as well as you were talking about. The Bank Nifty yesterday took a hit, recovered. Today there are more positive news on that. So let's see if it recovers later in the day. But the start is definitely on the back foot, Mangla.
All right, start definitely on the back foot, but a lot of stocks will be in focus, Anisha?
Well, yes, Bank Nifty, as I was mentioning, might be in focus. Yesterday it did plunge a bit. Then today there's a positive news that RBI has allowed banks to provide for losses regarding the MTM to be extended over the period of 4 quarters. So that really comes as a positive news for the sector. Other important news as well, because the banking sources tell CNBC TV18 that a lot of these companies have put in their bid for SR Steel, whether it's ArcelorMittal or Vedanta. JSW Steel has also come on board as an investor along with New Metal Consortium, so that remains important. However, Tata Steel has said that they did not want to really bid for Essar Steel. They are more interested in Bhushan Steel and Bhushan Power assets, so that was an important point there. Other than that, for ICICI Bank, that was in focus yesterday as well, down about 6%. Some positive news coming in the sense that the co-founder actually came in defense of Chanda Kochhar and said that can't imagine Chanda Kochhar can be a party to a transaction with any shadow of doubt. So that's something positive coming in for ICICI Bank. Motherson Sumi, well, they have acquired Radial Automotive for $201 million. The deal is expected to be EPS accretive from day one, and the analysts have taken it positively. So we will see a positive reaction on that. VST Tillers, well, they've started production on a new facility starting yesterday, as well as the production data for the month of March has come in strong for power tillers. Shivam Autotech, wherein they said that the March sales have gone up by 30%, and that is what they're expecting for Q4 numbers as well. So a positive reaction on that is also expected. Karnataka Bank also telling us that the business turnover as on March was 1.1 lakh crores, and they have given a new target for FY19 at around 1.3 lakh crores, so that also remains important. Galaxy Surfactants, not great news coming in there because the US FDA has issued 4 observations for their plant, but the company tells the exchanges that it's just 1% of the revenue. Newland Lab, there's a board meet to consider raising of funds. And lastly, OMCs will be in focus as well because remember, the crude actually fell 3% yesterday, so that also might be in focus.
All right, Anisha, thanks a lot for that. We'll keep all those stocks in mind. But keep in mind, as we slip into a short break, let's give you some good news. Your wait is over. The market leader in business news is now available at your fingertips. www.cnbctv18.com. Coming soon on your phones. Always stay connected with CNBC TV18. Log on to www.cnbctv18.com. Stay up to date with the latest market and financial news with cnbctv18.com. CNBC TV18 coming soon on your iOS and Android devices. All the important news, views, videos, data, analysis, catch soon only on www.cnbctv18.com.